Yeah, so I started on the Florida Chicago Mercantile Exchange. I actually started in the currencies. And a big thing you need to understand is when I started, I knew absolutely nothing. I had no experience. I had, no preconceived notions. No one poisoned me with bad information. You could have given me any strategy and told me this is what you do, and I would have listened to you 100% because I didn't know any better. You could have said buy on Tuesdays with a stop below the prior Wednesday's low and only doing it when it's a full moon the night before, and you're going to make a lot of money, and I would have done that. So Nico's asking a great question, and we're going to get to that, Nico, but let me kind of hit it right here for a minute. Yeah, so Nico's saying, well, isn't it easier on a trading floor because you have the orders in front of you? I used to think that way, long time ago. But after being on the charts for so long, I would argue it's actually the opposite. And here's the way that works. Remember, I was on a trading floor, and I did have major institution and bank and fund orders right in front of me, and those were real orders. Those were not just fake orders, just bids and offers that people pull all the time. These are real orders. But those were the orders that our trade desk has, and I could have peeked over to our right at our J.P. Morgan friends and seen their orders, and I could have looked at the Goldman Sachs desk, which was not far away, and seen their orders too. But still, those were just our orders. There were other orders out there around the world. Where's the one place where you see everybody's willing demand and everybody's willing supply? It's not the trading floor. So it's all there if you know what you're looking for. Yeah, so Nico, if you're focused on level 2 market depth and supply and demand, I'm just going to give you my opinion. I wouldn't spend another second doing that. Because, and if you do, I'm going to introduce you to a new way to look at that. Okay? In other words, on your level 2 screens, the market depth, yeah, even the fact that there's no central exchange, that should make it even clearer why you should not be looking at, a level 2, market depth screen in the Forex markets, right? Yes, Boyke, absolutely. The ones I dealt with did. So yeah, let me continue, and then we'll get back to that in just a little bit. Because what your question there ties right in, not yours, Boyke, but the other ones. Yeah, so they all had specific prices. Almost all of them were limit orders, right? Institutions and banks and funds would put in limit orders, and retail traders would put in market orders. That's something that was very clear. Another thing that was very clear, and this is the thing that really just got me so fascinated with the markets, was that, your average institution did so well so often, and your average retail trader actually did the opposite so poorly so often. So I always thought to myself, wow, how is this happening? This doesn't make any sense, but to me it's fascinating. And if I could just learn what an institution does, I'd be all set. Well, so I focused on that, and I saw, and what became very clear when I decided that was going to be my focus back then was I started to see where their profits came from, and I figured if their trades tend to be the right trades, well, where are they buying and selling, and who are they buying and selling from? If they're making all that money, somebody's losing it, right? So I started to see this, and that picture was even clearer to me because I had it all in front of me. It was retail traders, right? Not every institution is extremely profitable, but I'm talking about your average ones, your big ones. Bank of America. I think what I read was Bank of America is the only financial institution that had no losing days last year. Goldman Sachs had some losing days. They made plenty of money, but they actually had some losing days. Bank of America had none. There's an article out this morning. If you go to Yahoo News and you scroll down a little bit, it's a fascinating article. And let me explain why it's fascinating. It's about a trade Bank of America had in the options markets. It was very recent. Anybody see that? And it was about how profitable it was. They made like $1 million on it very quickly. So, no, but here's the fascinating part of the article. Make sure you get this part. The fascinating part of the article was they were the underwriters. They bought options on a stock that they thought was going to go up. They were also the underwriters for this company that was buying another company. Okay, so the company that they underwrote this deal where this one company was going to buy another company, and right before they did it, they bought options on the stock they thought would go up of the two companies, right? And so as soon as it happens, the stock, they underwrite the deal. A couple weeks later, the deal's announced, and the stock jumps 24%. Right? Bank of America owned the calls. They take their profits. They made a ton of money. Right? The fascinating part of the article when you read it is no one is saying that there's anything wrong with that. The article is about how profitable the trade was, not the fact that they can do that, but if we do that, we go to jail and prison, right? Okay. You'll go to jail and you'll have to forfeit a lot of money if you do that. There's the article. Someone found it. Thanks, Jason. But I'm telling you, the most fascinating thing about an article is there's nothing wrong with what they're doing because they're an institution. If you or I do that, we're in big trouble. Does that make sense? Anyway, that's what I found most fascinating about the article is thinking to myself, does anybody see anything wrong with this? Anyway, how can we do all that? No, and they're not going to hear from the SEC because there's nothing wrong with what they did. Okay? Yeah, it's up there in the chat. You could say they're all sharks, Sim. I can kind of agree with you, but at the end of the day, all they're doing is buying low and selling high. But the main point is this group on the left, all right, makes an absolute fortune from this group on the right. Now, this group on the right, the retail traders and investors, let's talk about them for a moment. Yes, and we can absolutely see supply and demand on a chart. We'll get to that in a minute, but let's focus on these retail traders and investors. Now, everyone, think about this for a minute, because I really want to make sure that everybody understands this from the core, basic bottom floor. This may seem boring to you at the moment, but you'll see we're getting to something very important. Who are these retail? Because everybody says, well, and I get that. I totally understand this argument. Well, how can these two groups even be matched up against each other? I mean, institutions have so much money. They move the markets. Retail traders and investors, they're such a small percentage of the market, right? We'd all probably agree with that sort of, right? I mean, it's like, come on, really, how can this group really be making money from this group? Because this group's so small and this group's so big. Well, think about that. I've thought about that for a long time. Who are these retail traders and investors? Who are these people? And I'm not just talking about day traders. That's a tiny subset of people. Right? Who are these traders and investors in the Forex market, stock market, futures? Who are these people? They're everybody. Let's talk about the United States for a minute, and then we'll move around the world. If your average job, your average career in the United States, right? What are you doing with the money that you make? Any of the money that you're saving, where's it going? It's going into your 401k. It's going into mutual funds. It's going into IRAs, right? Your company is even directing you to do that. The professionals are directing you to do that, right? Every single day, billions of dollars are going into financial products and stocks and Forex markets and currencies and all this stuff from this group over here. This group is actually not small at all. In fact, I would argue that the money coming from this group is infinitely not larger than the money over here. Remember, don't think of it as one against the other. Where does the money start? The money starts when you go to work, you get that paycheck, and you pay your bills, you keep your spending money, and then that investment income that you put into your 401k, that you put into your mutual fund, that you put into your whatever financial product there is. Okay? That's where the money starts for the financial system. Does everybody understand that? It starts there, and then it gets siphoned and transferred over here. This group over here gets paid three ways. They get paid on fees. So when you're told to buy something or invest in something or open up a Forex trade account, you're paid on fees, number one. Number two, they get paid through trading because everybody out there, buys high and sells low. I'll show you that in a minute. Okay. What's another way they get paid? They get paid on the spread. So they get paid three ways from the average person out there. And you may be thinking, okay, you may be thinking that what does this have to do with Forex trading? Okay. You as a Forex trader are making money from movements in the Forex markets, which are tied to movements in the equity index markets, which are tied to movements in the US dollar and treasuries. Believe me, this 100% affects you if you're a Forex trader. Okay. Now, we call them 401ks in the United States. In the UK, anyway, there's other stuff in the UK, right? Pensions are a huge part of UK SIPs. In India, they have their version, and in Asia, they have theirs. It's on and on and on. It's the same thing all over the world. Okay. So understand where the money starts. Harsh, yeah, but let me tell you, the world is never going to catch up. I'm not worried about that at all. Okay.